Wall Street Jesus here. Tuesday post-market recap. We get together Tuesday. Lucci's in Puerto Rico on a little vacay, living it up. So I'm flying here solo. But every Tuesday we get together. We talk a little bit of what we're seeing as far as flow, wise guy activity, overall sentiment out there. Price action, and I'd like to hear from you guys, how you guys are playing it, what you guys may be seeing, and it gives us a good idea of what may be in store the rest of the week. Obviously, this market's been crazy. There's been some volatility, to say the least. We got the Donald tweeting every 5 seconds. We got Donald Jr., Elon Musk, tweeting every day. So, I mean, we're full-fledged casino mode here. Good if you can be nimble. Good if you have some experience trading in this type of environment. Bad if you're fairly new to the market, meaning you're only trading for a couple of years and this seems out of the ordinary to you. But to be quite honest, this is totally normal. I know you're probably thinking I'm nuts to label anything normal that looks like price action like we saw today, but when you get in a corrective phase, there's always volatility. There are always headlines that people are looking to buy off of, sell off of. I mean, for crying out loud, Amazon this afternoon, which set off the squeeze, was a headline from, I think, a couple days ago, and basically set off the squeeze this afternoon. So as tough as it may be to get a grasp and try to make sense out of what's going on out there, this is normal when you get into this type of environment, okay? It's not going to last like this forever, but you got to trade what's in front of you, and we'll go over some of the things you can do to find a way to make some money and survive. Most importantly, survive. And that may mean even moving to the sidelines if you can't be as nimble or disciplined until, we see some better looking flow, some better looking, more constructive price action. And there will be a day we will see that. Okay. Maybe a while, maybe another couple days, a week, God knows. But if you don't have the discipline and you don't stick to a set of rules here, and we'll go over today, in my opinion, the most important rule, I don't care what anybody tells you out there, okay? And that may sound a little bit arrogant in a sense, but you guys know me, okay? I don't like, or I don't feel comfortable, I should say, playing the short side of the market, period. Okay, if you have trouble staying nimble, quick, active on the long side, then going short shouldn't be anywhere remotely close to your trading repertoire, period. All right, but if you do, and there are a lot of people, a lot of traders out there, especially the more experienced traders, who have success trading on the dark side, as I like to call it. All right, but a cardinal rule and a guideline that you have to stick to in this type of environment. Otherwise, you're going to get your head chopped off, I can promise. And you guys know what's going to come out of my mouth now. When the riffraff is leaning on the other side, do not short. Okay, there will be many other opportunities where you can go and bet on some downside. When the riffraff and the whole public and everybody and their mother is lathered up in put protection and playing the short side, you have to stay as far away as possible, okay? And that may mean not getting long, okay? That's fine. If you don't like what's going on in the market right now, even as an active trader, day trader, enough to the point where you're not comfortable getting long and putting on some long exposure when you see that type of sentiment, that's fine. But one thing you cannot do is get short, okay? And today is a perfect example of why. Today, in my opinion, I mean, at times, the flow was pathetic, okay? The flow was bullish all day, okay? Let me just put that out there. But there were periods outside of the early morning fade. That's where the best of the action took place on the call side. Outside of that, there were periods where there was nothing really going on. There was just no activity. It was dead out there, okay? And you had these market fades. I mean, if you look at SPY, for example, let me make this bigger here. Okay, after the early morning here, you had a nice little rush higher at the open. Then this fade, that's where the best of activity took place, in my opinion. Then you had another move, okay? And then as we're going to see a lot of this too. If we're in this corrective phase going into the summer months, we are going to see a lot of this throughout the whole afternoon. Okay, a lot of you guys know when we get into the dog days of the summer, especially, you get morning action, late day action. If you're lucky, 80% of the day is useless. Okay, you get something like this, but because of the market weakness out there, and because traders have been finding success on the short side, where they weren't finding success on the short side all last year, it was impossible to short anything. They get carried away. They don't pay attention to things like the overall sentiment out there, and they get caught trying to short these fades. Okay. And what happens is, as bad as the market may look, right, and as quiet as maybe the flow may look, or anything else you're paying attention to, tape, time and sales, whatever, any little headline could be just even algos firing to create a squeeze. When they have them leaning on one side like this is what you get. So as bad as this looked, and we look like potentially we were going to go into the red and sell off from there, a nonsense bullshit, excuse my French, Amazon headline created this because everybody got caught. Okay, everybody was looking they were short already, looking to put on more short exposure here as the markets were just dripping away. One positive headline, you got algos firing, creating a squeeze. Flow starts to wake up, boom, 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 and that's what you get. Okay, so again, I'm not, if you're new to the game, I tell you not to short. I think you should work on the long side of your trading, because I think predominantly that's where you'll be trading, because for the most part, the markets, we have more bull markets than bear markets. Okay, I mean, that's just factual information. So if you're new to the game and trying to develop a strategy and get a feel for things, I think you should focus more on fine-tuning the long side of your trading, okay? But if you're experienced and you like to play the short side, I'm not going to tell you, if you're having success on the short side, that you shouldn't. If you're not having success on the short side, I think you should kick it to the curb immediately. But if you're finding success, it's fine. But one thing I can promise you, okay, and it will help you out drastically, is stay away when you got everybody leaning on the short side. All right, and how do you know that? Okay, it's a question I get a lot. One, anybody who's in the room should never ask that question. All right, anybody who's on private Twitter shouldn't ask that question, because I throw out sentiment charts every day, all day, constantly, especially when we're at extremes. Okay, and not only the charts, I'll make the point over and over and over again that we have sentiment on our side. When I say our side, I mean the good guys' side, meaning that we should look for entries into any fade or weakness for a high probability squeeze. Okay, so if you're in the room or you're on private Twitter and you're not aware of this stuff going on, you don't have your eyes open, okay? But if you're not, there are some easy ways, easy access ways. I mean, an equity put to call, a total put to call would be one measure that everybody has access to. All right, you can see on the bottom of the screen here, this is just a simple put to call volume ratio, as simple as it gets. Okay, it's not as accurate. It doesn't give you as much information as some of the stuff we look at a little more closely, all right, in the room, but still gives you a general idea. And when you see this thing spike, this tells you that people are leaning on the put side too heavily. Whether it's fear, whether it's price action, got them thinking that the market could roll over, whatever it is, okay? Throughout my experience, there will be a squeeze that at least runs these guys over and shakes them out, even if the market has intentions of finding another leg lower. Okay, is there that one time where a put to call may spike and the market continues lower? Yeah, of course. I can tell you in 2008, there were spikes in the put to call. I shouldn't say spikes because there wasn't too many of them, but there were times where there was a spike in the put to call and the markets continued to sell, but you had Armageddon in 2008. You know, instead of focusing, and the reason I bring that up is I get that a lot. Like, if it doesn't work every time, I get the impression like people say, then it's not worth paying attention to. And that's why people ignore these things we talk about every day, because they see it work, they see it not work once, and they think, oh, there goes that crystal ball. But this game's all about odds, probability. That's where an edge comes from. And if you know 8 out of 10 times that when you get a sentiment spike on the bearish side, like we're talking about, 8 out of 10 times, there's usually a squeeze right around the corner to run them over. Why would you try to short? You know, why would you even try to short? For that one time, maybe the market rolls over and you can make some money. Wouldn't it be prudent to step away from that? Again, I'm not saying go long. If your bias is that bearish, I'm not saying for you to flip and go long, but just don't short into that. And again, today was just a perfect example of that happening once again. Okay, you know, this rally, yeah, up 1.3%. SPY was up 3 and change. You know, that's a legitimate rally on any other day, right? Last year, nice day, whatever. In this market that we're in right now, it doesn't feel like much. But you try getting caught on the short side and tell me it doesn't feel like much. All right. I mentioned that I was a little frustrated today for the simple reason that when I see the stuff I'm telling you guys about, these squeeze signals set up, I come into the day, and that's where I look as a day trader. That's where I look to get aggressive. Okay. So if there's any sort of call activity out there, that's my trigger, right? I want the flow to confirm what I'm seeing, because as a day trader, the timing matters. And I want to try to get it as long as possible. Okay. And this morning, there were those opportunities there. But then we went into this dead phase where the flow went dead, the price action went dead. You know, you had that Trump conference, I don't know what the hell that was, that killed an hour out of the day where the market just stood still. And I never really had that chance to get aggressive again. And, you know, days like this where, you know, you get a little bit of a gap up and the market retraces, you know, I love that. You get this gap up here higher and then the market retraces here. Everybody thinks we're going red. But, you know, my edge is simple. My edge is, okay, I know I have sentiment on my side for a high probability squeeze. Okay, that's my edge there. where everybody thinks the market is going to roll over and nosedive, my edge is telling me that the probability, the likelihood of that happening is not high. In actuality, the total opposite is likely to happen. Okay, and then my trigger is flow. All right, and if flow looks like this, okay, predominantly buying here, right? Some isolated put activity and obscure names. You know, that's a beautiful thing for me. That's where I want to get long into the fades throughout the day. I don't want to get stupid and chase things that have already run. I mean, that's ridiculous. But, you know, that's where the fades come in handy and I want to get long. But like I said, you know, you could see the flow never really went bearish. It just, as we got after lunchtime, it just went dead. It just went dead. And then started to pick up in the last hour of the day, which it normally does anyway. Okay. A couple decent names out there. A little better action than what we've been seeing. We saw some sectors get some attention instead of just that selective buying. I'll give you an example. A couple biotechs saw some activity today. SRPT, which they've loved for a long time. More action there today. You got a little bit of a pull there. Wasn't up that much when it caught the action. Was up like 20 cents, I think. So that's a lot better than chasing on a day where this thing's up 2, 3. A name a lot of you guys like to play, RGEN. Anybody in this name? Anybody trade this? Wait, not REGN. REGN. I typed it in wrong. Anybody like this name? Anybody in this name? No, nobody? Well, this one caught a decent sweep too. I'll give you the details. Here it is. Nice circle there, Jesus. So this guy sweeps. You can see not a huge lot. 400 plus, ended up being 700. April 340 calls, lay some nice wood. And usually this REGN, once in a blue moon, we'll see some decent action like this. Normally, it's really small activity in this name. They don't sweep this name a lot. This is one of the better looking orders we've seen in this name in a while. Again, nothing humongous. It was one order, one sweep. But compared to some of the action we've been seeing out there, yeah, the flow's been abysmal. Let's see. Another name was this one here. I had Maz do some digging on this name. Interesting sweeper here too. PTLA. Again, keep in mind, guys, some of these biotechs, they could go to 0 for all I know. But I know a lot of you guys play them. If you play the calls, risk-reward wise, they're worth it. I had a home run or a strikeout, but if you're willing to lose what you put in, again, RR-wise, they're worth it. All right. This PTLA caught a decent June sweep. Basically, a player went in the money, not deep in the money, but in the money, laid some decent wood rather than going way out of the money on some speculative type crap. So decent looking sweep in this PTLA. So again, moral of the story is some biotechs got some attention. Some of the energy names got a little attention. They started to see some action yesterday, carried into today. Names like COP, which had a great day, by the way, COP. You compare this to some of the other energy plays, this looks like a stud. ETP, which they continue to come back and buy, had for this day, this is a parabolic move for ETP. Up almost 40 cents, finally starting to poke out its head a bit. As most of you are aware, they have come back. One of the few names, guys, throughout this, I guess I'll call it second stage of the correction, one of the few names they've come back numerous times for. not to jump around, but I made the point, especially on Saturday webinars, that into this low, we saw them hit a good handful of names over and over and over again. Even though the stocks didn't react initially, it was a good sign that if there was any more weakness, they'd come back and sweep it again. That stresses conviction. It stresses confidence, right? Like, they don't care the stock is down again today. That's an opportunity. That's a gift from the gods. We saw names like Win, STZ, tech names. If you remember Intel, Microsoft, we haven't seen that at all on this poll. One of the few, ETP. Okay, so again, it's not the sexiest name. I mean, a lot of people buy this thing for a yield more than anything else, but maybe they see some value there. It's been beaten down to hell. The primary target there, September calls. Okay, so they got some decent time. April caught a little bit of action today. June, they've been dabbling in, but September has been the pileup. So we saw some energy names, the COP, the ETP, couple others there. Tech, not as much. Some underbelly tech names. Avgo caught a decent looking sweep. That had a nice move today. That stock was basically flat, up 80 cents early on. Grinded throughout the day higher. That caught a nice looking sweep. SWKS caught a sweep. It does catch earnings, but another semi name that you guys might know. All right, but again, tech, not as much. You had some Facebook sweepers and stuff like that, smaller ones, but nothing really too good looking there. And then we had banks see some activity. Bank of America always finds a way to see activity. Saw some buying today, right out of the gate throughout the whole day. Morgan Stanley, some decent flow today. And JP Morgan in the afternoon saw some activity as well. Wells Fargo caught some Jan sweeper activity yesterday. And this actually this squeeze set up, I mean, for me anyway, yesterday into the bell. As gloomy as things looked, we were keeping an eye on some of the sentiment stuff, the intraday stuff we look at. Okay, equity put the call, the squeezometer, we call it. And we were set up sentiment-wise going into the bell yesterday, and it was a good sign. You could see here, you could see bullish activity into the bell yesterday. So this was stemming up from yesterday into the close, and then just carried over into today. All right, where do we go from here? We'll see. I mean, me personally, and those of you on the Saturday webinar, we went over this thoroughly so you can understand what the hell we're talking about when we say this. But the playbook for me, obviously, to be nimble is the way to be right now, right? You hear everybody say that. If you're an active trader, if you can be nimble, that's what you're looking to do here. So at the same time, for me, I think the best opportunities are going to come out of what we saw into yesterday's close. Okay, where you get sentiment lined up, set up for you, right? Everybody's bearish. And you see some flow come in, buying that weakness. And then you have that squeeze to lock in some gain into. Okay, so if you could be that disciplined, that's the playbook in this tape. Now, if you're playing the short side, you're looking for kind of the opposite. Okay, you're staying away from when sentiment is lining up too bearish, right? And then you're using rallies, and when some of that bearishness comes out of the market on the sentiment side, you're using that to look for short entries. Okay, the in-between is what becomes really difficult. Okay, and the in-between for me, I could just share with you guys what I look for. That's where flow basically is the old be all. So what I need to see tomorrow we come in, hopefully, there's a little bit of weakness, because if there's green, I'm not going to feel comfortable chasing anything. But if the market's down a bit, flattish, whatever the case, and we see some aggressive call activity start to stem up again, that would be a real good sign for me. That would be a positive sign that maybe this particular squeeze can have some legs here. So that's what I'm looking for. Aside from that, if the flow goes back to what we were seeing, that means we're going to see a lack of buying. We may even see put sweepers come into green and help drive prices lower. So that's kind of where I'm at. And I tell this to every one of you guys. If that's not enough of an edge for you to have in trading right now, then you need to step aside here. The only other approach would be, that I know of anyhow, would be when sentiment lines up and you get that weakness, you buy stuff you like with time behind it. We've been seeing there's some leap buying out there. They're buying 2020 leaps. Like I said, ETP has had some nice action. The bulk of it, September, some time behind it. So if you want, if you're bullish but unsure of, the timing aspect of it, you don't necessarily have to nail bottoms to make money. Just make sure you have some time just in case you're early. And you're likely to be early. It's a tough market right now. Forget about comparing this to last year or even the year before that, prior to that. We haven't seen this type of volatility, this type of flow even for a while. I said probably since before the election. So this is a totally different market. Some other promising signs, honestly, more for intraday than anything else. Again, the flow going forward tells me more than what we're seeing right now. If put sweepers come in tomorrow morning and start getting aggressive like we've been seeing in days past, there was a day last week where the market was green. There was no call activity, and then all of a sudden SPY put sweepers came in like a bat out of hell. I'm a bull by nature, but I'm not stupid. Those aren't bullish signs, obviously. So if we see a different type of wise guy activity out there, that's going to tell us a lot. But if we see the same thing, a lack of quality buying, mixed flow, red, green constantly, put sweepers in control, then we're just, again, the playbook is what I just told you. Okay, but one promising sign today, this was probably the best order out there at the time, was this SPY dude right here. This right here, again, with sentiment, with the flow around it, gave the majority of us who were leaning long some confidence. Again, I'm pissed off that I didn't have enough of a bang off of it. But sometimes I need to get lucky for me. You know what I mean? Things got to work out, because I'm the worst with writing winners anyway. So I need to get lucky there. But this was a great sign right here. And then there was some UVXY put buying that came in the afternoon that confirmed that squeeze. So there were some good signs out there. Anybody see anything today, especially you guys in the room? Anybody see anything that's worth noting here? Brant, the same. Do you think we need a lower VIX to see quality flow come back? Honestly, Brant, I really don't pay attention to the VIX as much. I know where it is at times and stuff like that. But a better sign would be if we saw put sweepers get aggressive in those products. There's nothing more bullish than when they're sweeping VXX and UVXY puts. And a lot of times when rallies really start to heat up, they get extremely aggressive in those things. I'll give you an example. Back in, and a lot of you guys who have been with me for a while know I use this example a lot because I think it best portrays the story of sentiment and flow together and how deadly of a combo it can be. Back pre-election, when everybody was calling for the death of the market if Trump got elected, we were seeing flow really similar to what we're seeing right now. Uptick in put activity, a lack of any quality call buying, not much call buying out there, you know, that type of thing. VXX call buying, UVXY call buying. So everything bearish you could see, we were seeing it. Then, just on one particular day, it was a couple of days before the election, the market started to make new lows, rolling over, and we started to see UVXY and VXX put sweeper activity. Okay, and we were kind of taken back because it was the total opposite of what the noise around us was signaling. You know, everybody was skittish, everybody was bearish, everybody was buying VXX and volatility stuff. So then we started to see sweepers get aggressive in the UVXY, VXX puts, which stood out like a sore thumb. And then literally later that day into the following day, and we started to see it spill into the ETFs, SPY, IWM. Instead of put action there, we started to see SPY IWM call sweepers that looked like this one here, you know, 3.3 million. So it can happen quickly, and that's why for me, Brant, that's all I need to look at. You know what I mean? That's all I need to look at. No stronger signal for me would be if sentiment is bearish and sweepers are aggressively bullish. You understand? My point being that the VIX, once you see it coming down, the process has already started in a sense. You know, what I'm looking for is I'm looking for those VXX put sweepers, UVXY put sweepers, and the call buying to improve. And that will happen before the VIX rolls over, if that makes sense. Okay, so that's kind of what I'm on search for every day. And honestly, Brent, that's what keeps me in my seat literally every day. And people in the room can vouch. Like, I don't like to leave the desk because the thought of me missing out on that setup would drive me nuts. You know, so days when the market action's dead and I could probably be fotzing around doing something else instead of just sitting here if there's no call activity, because I'm not playing the short side. I mean, that's all I'm waiting for. And from my experience, it comes when you least expect it. Not always, but a lot of times. A lot of times. And like that election example I'm giving you, everybody remembers the futures tanking that night of the election and then coming back overnight and rallying from there. What people forget, there was a massive squeeze a couple days prior to the election. You know, as a matter of fact, I remember a lot of people in the room at the time weren't holding anything into the election because they locked in some profit, being prudent prior to that, because there was a big squeeze a couple days prior to the election. So, you know, that's kind of the blueprint of what we may see here, you know, based on the sentiment stuff and the stuff we're seeing. You know, it's going to be pretty obvious when they're for real behind the flow. Like today, honestly, you guys heard me say this numerous times. It was bullish. It looked like squeeze flow. You know, it looks like they're playing for the squeeze. I've been watching this flow long enough. I know when these guys want to own calls. You know, I know what it looks like. I'm screaming bull missile every other breath out of my mouth. You know, it's not that spec action in weeklies. It's not under the radar. It's pretty blunt and obvious when they buy weakness like this. And we're not seeing that. They're just, and it tells me there's no confidence right now out there. Because again, we're focusing on the aggressive activity. There's a lot of block buying out there. They're replacing stock. A lot of that stuff going on. A lot of big blocks on the call side, and they're selling equity and replacing the equity with calls. Okay, to me, that's not aggressive. I want to see them sweep multiple exchanges, multiple offers. That tells me that they're more concerned about getting filled than what price they get filled, like a negotiated block. And you'll see them just keep coming and coming and coming, and tripping over themselves. And then you'll see the algos get set off, and they're firing sweeps all over the place. And the flow just explodes. The flow just explodes. Okay, so that's kind of what I'm looking for, and you look for early signs of that happening. I don't see that yet. I don't see that yet. Mola Jad is saying, how about the February 11th Bazooka Joe? Yeah, and that's it, Mola. Or the Tepper buyers he's talking about. That's it. That's, you know what I mean? Like those guys, and Mola, that's why you bring it up, right? They're obvious. They're obviously bullish. That you're not pondering that activity and saying, wow, is it a hedge, or maybe he's selling this? You're not even asking questions. This guy's getting bullish. Who cares why? And he's showing some big confidence there. And the Bazooka Jolos, for those of you guys who weren't around then, and where Bazooka Joe got his name, similar to what I was telling Brad, as far as it came when it was least expected. February, that day Mo was talking about, the market started to roll over again. And everybody was making money on the put side. The market looked like crap, looked like every rally was getting sold. And then all of a sudden, one sweeper comes in and sweeps IWM, similar to that SPY order. Okay? So you're like, whoa. That's a big bet. Maybe we got a turnaround today. That's how it started. And then 2 minutes later, we see a SPY and a Q bullish bet. Exactly like that. Almost a mirror image. Then we see Apple get hit. Then Facebook get hit. And then you're like, holy shit. Right? Somebody's firing a bazooka here getting long. So that's what you see when you see that buying dry up, from my experience. That's what you see when they're for real. And that's not to say that there won't be a rally to 270 on SPY and then we chop around here. There's a good possibility that that's the case. I mean, my opinion, guys, with as drastically as sentiment shifts out there, it's going to be hard for them to get a sustained push lower in this market and keep it there. Because what's going to happen is everyone's going to be all lathered up in protection already. So if you think that's going to happen, you're saying to yourself that the riffraff, the retail crowd, is going to make money on the short side here. Okay? If you think there's a strong possibility of that, then, that's what you're looking for. For me, I think you're going to see fake breakdowns and maybe fake breakouts based on, some of the flow and the sentiment I'm seeing. That's what, the stuff I'm looking at is telling me right now. So again, reverse to the playbook I just explained to you guys. If you're anticipating that, how do you play that? You buy those breakdowns when sentiment aligns, and you sell the rips when you get them, right? Now, I know it sounds easier said than done. It's not that easy. It's not that easy. And one of the reasons why it's not that easy is because when you're looking to buy, a lot of times that's where it looks the worst. That's where it looks the worst. That's why sentiment is so bearish. So that's what I see out there right now. but based on flow and sentiment. But these are great questions, guys. These are great questions. Mike Panarakis. Mike, you Greek? That's a Greek name. That's got to be a Greek name. I got Greek in me too. A good portion of me Greek. The $3 million SPY bet was good, but still it was a bet in the green. I need bet. He makes a great point. You know, Mike is saying the SPY bet is all fine and dandy. It could be a great indicator of, you know, intraday momentum based with the other flow. But the telltale sign usually, and that's what Mike is saying, is when there's weakness. What do they do with that weakness? Because guys, here's the thing, and a lot of people on social media who follow flow and just out there in general, because I used to do the same thing. What I realized is when the market's green, the market's rallying, there's always some call buying out there, always. And when the market is red in this environment, there's always put buying. That's normal. That's the norm. Okay, and that's what Mike is making the point about. When you see aggressive call sweeper activity into weakness, that's when stuff looks a little different. You know, that's when it looks a little different. And like I mentioned recently last week, when you see the market green and all of a sudden SPY put sweepers are tattooing puts into an up tape, you know, that's not a good sign. That's not a good sign. So Mike makes a great point there. Again, a great point. What else? Who'd I miss here? I'm so bad with these questions. This is where I need Lucci here. Because for some reason I have trouble keeping these questions in order. Brant is saying I would love to see some huge VXX puts. Yeah, without a doubt. I think honestly, if you could have your way, okay, before the flow comes into individual names, they hit those first. That would be the best case scenario, Brant. The single best case scenario. You know, because what happens is a lot of times I realize it gives you the opportunity, especially as a swing trader, to get a game plan together. You know, now you're like, all right, here's the start of it now. Because that's the first thing. When they build up the confidence that a big time squeeze is coming, I'm telling you guys, they annihilate those puts on those volatility products. They hammer them into the ground. Hammer them. A lot of you guys may not remember, even those of you in the room, because we really haven't had anything like this, it feels like in forever. But you go back in time, again, pre-election, all that stuff, that's their favorite play, betting, you know, placing confident bets on a rally. They hit the put side on those things aggressively, to say the least. Let me scroll down here. Lee is saying, Jay, what about Facebook? Facebook's a tough cookie for me, Lee. One, the environment we're in. Two, the noise around it. I hate stocks in the news. Okay, that's one thing I hate. Now, what would be a nice setup for me in Facebook would be it goes dead here, kind of, which is hard for it to do, right? Because you still got those headlines out there. And then we see some really good-looking action come into it. But I will say this. One of the better-looking orders, now it's just one order, as you guys know, but one of the better-looking sweeps came into some Facebook. I forgot what line did they hit. They were deep in the money. Somebody could probably dig it up. But it was just one order. So now if we started to see a couple of those sweepers step up, you know, I like it. I like anything that looks like this and the flow turns. You know, I was telling the guys, if you could have a bazooka right now, it would be in Amazon or, you know, Tesla. We were talking about this yesterday, or Tesla. Yeah, because all the shorts are piling in there. You know they're all stuck in there. If you get Bazooka Joe firing into one of these things, that's a great setup there. You know, that's a great setup there. So I would say the same thing, Lee, for Facebook, but you know, you just want to see enough so it doesn't get lost in the noise. One of the members had a great point. Like Facebook caught, I think it was a May missile. but all around it was nothing but put buying and protection. So it's a mess. But I would definitely keep an eye on it, Lee, and keep an eye on the action there. But you want to see real action there. You want to see real action, not that spec action. Matthew's talking about BABA. I got stopped out of BABA today. I don't know why I even bother day trading this BABA. It's a tough one. It's a tough one. This is a tough one. BABA goes through moments like this when she's choppy, where as a day trader, it's really difficult because you got to stay so loose, and then you're liable to take a big loss then. BABA had some small spec type sweepers, had one block. That's what you guys are probably referring to. Let me see if I can dig it up. If it was a sweep, I'd feel more confident about it. This one here. This top line. So see, it's a block, negotiated block, June 185s. Catches earnings probably, right? And then, look how tiny these sweeps are. This was a $7,000 sweep that hit the board. There were some better looking ones that didn't hit the board, but BABA's a tough cookie. But again, today I was looking to be pretty aggressive. So any action out there, I was looking to get long at one point in time. But it ended up being a loser for me. So, but yeah, BABA's tough. Here's my question to you guys. You guys probably know because you follow this crap more than I do. ABA, is this basically, this just tracks BABA? This ABA just does what BABA does? It's official? Because this ABA usually catches the better activity of the two into weakness. And I find it strange. Like, why do they hit this name and the BABA really doesn't catch, I don't know why that is. But I find it strange. Like, usually they like to buy weakness in this name. And, the flow looks a little bit different in BABA from time to time. Yeah, it does. So, I just figured that's what I figured, but I figured I asked you guys just in case something changes there. James is saying, I heard you call out some Twitter flow. Yeah, there was some Twitter flow early on in the morning, but peanuts. What'd she do? She rally at all today? Nothing, right? Yeah, Twitter, it's in that Facebook camp. Flow's been pretty mixed. This is probably what you're talking about there. So you can see small action. These things are a dime a dozen, guys. You know what I mean? A dime a dozen in this tape. I mean, look at on 327. Look at this. It's a mess. It's a mess. But yeah, James, for me, you need a missile. You need a missile there. Unless it lines up to what you're looking at on your end, and you can use any flow as an indicator, or flow itself, it needs a missile here. If they want it off this, they're going to hit it hard. They're not going to nickel and dime. You know what I mean? Off of this, they're not going to nickel and dime. Ani's saying it's because they want to divest Yahoo Japan and get some of the discount off ABA. Oh, okay. So maybe they're playing that in the ABA. But yeah, the ABA flow, there's been some big action in ABA. Usually off these pulls, there's one guy there, he's probably underwater recently. I think it was June, July, something like that. But they've been doing it literally probably this whole entire move up. There's been a lot of flow in this thing. A lot of flow. And there's some big orders too. There's some big orders. One of the bets was a block that was tied to stock the other day. Let's see. What else we got here? Gator saying XLU was the only sector that survived the blood last week. Is it hitting anybody else's radar? XLU, we've seen some individual names get some attention. what was the one that just started moving that caught some flow? Is it PPL? I think it was that. Like this PPL, they hit recently into the lows. I think the mini, but nothing really, nothing huge. Honestly, there's been no big, clear-cut, real signs of rotation. That's another thing, a major portion of what we're seeing that's been different than any pullbacks in the past, right? Every pullback, we used to see this major shift, major rotation into other groups. We're not seeing that. We're seeing selective buying in particular names. Like today, for example, and they're small signs, but the first signs that maybe they're looking at some sectors, right? Biotechs look like they were seeing some flow. The banks look like they were seeing some flow together. Energy, still bits and pieces. But aside from that, nothing. The last rotation we saw, guys, if you guys remember, the last rotation we saw was that NASDAQ rotation, which kind of caught us off guard, if you remember, because NASDAQ was already outperforming, but that's all the focus, right? It was this pullback here, I think. And to this pullback, all they were hitting were those tech names. So since then, nothing. Brand saying my scanner doesn't pick up ETF and ETN action. Will you post any interesting VXX puts on Twitter? I've got them sitting on the sidelines until then. Yeah, a lot of times I post some of the big stuff on Twitter. It might not be in real time if you're talking about my personal Twitter. But a lot of, I know a lot of guys on Twitter. I've been on Twitter for a while, so some of the big time action, I try my best to post it on there. Not all the details, obviously, but I try to at least paint the picture that something may be taking place. But the ETF and ETN stuff, I only pay attention when there's real action there, because again, there's action in these things 24/7. So I'm just paying attention to the goods. Microsoft still continues to see some buying here and there. Microsoft's still seeing some buying. I think today there was some September action. I don't know if they open. It was the same line they played in the past, so we'll check open interest there. But yeah, Microsoft has seen steady flow throughout. It's held up decent too. Microsoft's held up decent compared to some of the others. But today was quiet in tech. Like I said, the couple sweeps that stood out to me, Avgo caught a decent looking sweep, and SWKS, smaller sweep, but did catch a sweep. The Avgo guy, let me see if you guys are wondering. Just keep in mind, Avgo's up a good amount off the sweep, so you might want to wait for a pullback there. You don't want to chase 8-point moves in anything. Let me see here. Where is it? What the? Oh, I put my personal on there. Hold on. But it was a good looking sweep, the Avgo. Come on! This Twitter, I swear to. Oh, I know what I did wrong. My bad. So here was the total action at the time. April 6th weeklies. You can see weeklies here again, 240s, July's, some weeklies here again. So you can see had some decent flow. And here was the actual sweep. Was it this here? I think it was this. Yeah. Again, nothing huge. So that was at 10:30 this morning. Weeklies. This is typical of the action. When I say squeeze action, for you guys who are wondering, like my terminology, because it gets out of control at times, I'd be the first to admit. But this is what I mean by squeeze activity. You know, this guy's going for a squeeze. Decent bet, you know, for Avgo. And we saw, you know, we saw a decent amount of action like this. So that came in, right, look where that came in. Right off that fade. This is, like I told you, off this fade, that's where the best action came in today. Which is great. That's what you want. You can see you had a huge move there, and then you had to sit through a fade if you wanted to catch the whole move, if you were holding through that. All right, but this is what I mean by squeeze flow. You know, if this was a missile, as we like to call it, or a quality order, you know, you would have seen probably at least May, June, July here, you know, more bigger premium or bigger contract size type thing. You know, you would have seen the guys making a bet, you know, on the name, not looking for a trade. These guys don't fool around in weeklies when they're making these real bets. Very rarely. They might sprinkle in weeklies around some of the big stuff, but doesn't look like this normally. Was there any notable micron buying? Nothing really notable, but there was micron flow, a good steady pace of flow throughout the day. Again, one of the names they came after initially off this little fade early on, and then, you know, throughout the day, micron caught steady action. Jerry saying, what is the squeezometer? Basically, the squeezometer is a put the call indicator, just with a little more criteria involved. So what I try to get at with the squeezometer is get an intraday reading on what I like to think is the retail options flow out there. So I'm looking for small lots, non-sweeper, opening activity only type stuff. And that basically will give us an idea of what the crowd is doing. You know, I don't want, I mean, to put the call, most of us use it in a contrarian way. I don't want to take any a contrarian approach with against sweepers, obviously, you know. So it gets out, for me, it gets out a lot of the noise, and it's used mostly for intraday purposes. Like, you know, the put the call, like this one here, this is as bland as you're going to get it. This basically measures just the volume, puts as opposed to calls, trading on the day. So it can be misleading at times, but when you get big spikes in it, usually it gives you the, you know, it's doing its job at least. It gives you an idea. You know, so when you see something like this, you know there's going to be a squeeze on the horizon to shake some people out. You understand? When you see a spike like this, usually there's a squeeze coming to soil. You see how they softened it on them? And, you know, a lot of times you can see the last low here, even just a volume indicator, you had an idea of what the hell was going on here, right? But some of the other stuff I look at, most of you have seen, whether you're members or not, it's a clearer, portrays a clearer picture of what's going on. But that's what we nicknamed the squeezometer. Reason being is that when retail is extremely bearish, that tells us that chances are algos are going to run them over, right? Rally, squeeze the daylights out of them, that type of thing. What else? Did I miss anybody else's question? A couple of great questions, though, guys. A couple of great questions here. Did I miss anybody? That's my concern right now, because I usually do. We need to see more. We need to see more of these. Oh, the good bets feel like crumbs compared to some of the good stuff. Yeah, And here's the point. I forgot who mentioned that, but here's the point somebody's making. You guys, I don't think you guys realize, especially if you've been trading the last couple of years. Last year, okay, post-election, the flow we were seeing was ridiculous on the call side. That wasn't even normal, to be honest with you. We weren't seeing that prior. You know, like people talking about the Bazooka Joe lows in 2016. We were pretty much seeing this type of flow every day for a decent period of time before Bazooka Joe lit it up. You know, last year you would see missile after missile after missile in different groups and different names, you know, up until the tail end when the flow really, you know, started to just migrate to tech names. You know, prior to that, you guys quickly forget transportation names that would never see flow, seeing huge aggressive orders. Deer, names like Deer, you know, Caterpillar. You know what I mean? We were seeing huge aggressive action in names we never saw that type of activity in before. So that's why I try to tell you guys that what we were seeing last year is not really the norm. You know, it's not the norm. It's more of an aberration. That's a big year where the flow just exploded behind it. I think this is more of a normal phase. Now, granted, we're in that corrective part of it now, but then you'll see that type of flow come in. You know, we'll get a nice rally out of this, a tradable rally, and then eventually there'll be another pullback corrective phase where the flow flips and dries up on the call side. You know, that's more normal. This is not. This is not normal. So that's why, you know, I sound like a broken record, but you hear me guys say a lot, you know, try not to chase, wait for things to set up, that sort of thing, because last year you got away with it. As a trader, from my experience, you know, those things, they can ruin you. And a lot of people got used to that last year. A lot of people got used to it. You know, the norm is, guys, and not to ramble on this, but the norm is, you know, you find an entry out of consolidation, some weakness, okay? You get longs, you're looking for long entries at that initial start of that move, right? Whether it's a couple days, maybe a couple weeks early on, depending on how quick the move is. And then as that rally pushes higher, you're not just selling those names and then putting on the same long exposure in different names that rally just as much. That's, you know, that's not how this game's ever worked for me. You understand what I'm saying? Like, for example, let's say we start to see flow really heat up here. You know, they're really starting to buy things, and, you know, the market's just bouncing around here. It looks like it's finding a bottom. You know, this is where that sweet spot, this is where you want to start getting long for as long as you have the opportunity. And then, you know, as you push higher, you're taking profits, raising stops, that sort of thing, and then waiting for something like this again and seeing if they buy that. You know, what a lot of people were doing back here is, oh yeah, I bought Amazon, Apple, Facebook. I just doubled my money. You know what? I'm going to buy Amazon, Facebook, and Apple again up here at higher levels just because. You know what I mean? And they got away with it. But that's not normal. So what's going to happen is we're going to get a rally like that. And, you know, anybody who does that, there's likely going to be these things here where they get shaken out thinking we go to new lows, but they'll buy some other things that are at decent entries. You know what I mean? But you got to try not to chase. You got to try not to chase these moves. You know, similar to this, we just experienced it back in Feb. You know, here, the early parts of the rally, that's where, you know, your biggest winners are going to come out of. That's where you're looking for the most long exposure. And then, you know, you get this move. The quicker, the bigger the move, you want to, you know, trim that and protect that and do what you need to do. And then, you know, see what the flow looks like into this. There's some buying into that or pullbacks, some names in consolidation. You're looking for another long setup. Sometimes you get this where they're not buying anything. So that's the thing I try to stress to a lot of people. But again, I looked foolish stressing that last year, right? I looked like an idiot. It went in one ear and out the other because people felt like they were making the wrong decisions based off that because of this. I mean, it makes sense though, right? Mattel, listen, here's the story with Mattel, okay? Mattel saw some action today in May. I say this every time Mattel catches action. There could be a rumor out there. I remember last time there was a rumor they were spinning off some division. You can get a trade out of Mattel flow, okay? Because a lot of times they start hitting it here. You get that chatter, that rumor. What did it do? I think it did this the last time, right? Right here. I think it was this, okay? But if you don't sell this and you get hung up on that rumor, you're dead. Because there's been chatter in Mattel this whole trip down. And obviously nothing came to fruition, right? But that's the play on Mattel. If you like this setup, which I can't really blame you, it's dead on the floor right here. So there is the potential for that squeeze, right, to 14-ish. And that's what you're looking for. There's a trade there. If you're looking for more than that and you're hoping to catch a takeout or something like that, go to church Sunday, light a candle, maybe you get lucky. That's my synopsis on Mattel. But it's normally it's all chatter flow, And listen, you could also, if you're not sold on it here, wait. Let them come back again. You know what I mean? Let them come back and buy it again. They're not doing that with a lot of things in this market, And it tells me that this flow, a lot of it's fugazi, if you know what I'm saying. Al's asking, how serious would you take a missile with earnings season? Oh, God, Al. You got to rain on my parade, right? Every time? That's the other thing we got going on now. But you make a great point, Al. You make a great point. That's a good question. I can't take it too serious, right? I can't. You just can't. So basically what you need to do is you take blocks, all the size block activity, throw it out the window. If it catches earnings, forget it. Okay. And you're looking for sweepers only. And the only thing you could ask for is to look to take advantage of that momentum up until earnings. Now here's one thing too that would help out, that has helped me a lot. If you just see one missile in one name and we're not seeing the flow improve in that sector or anywhere else, chances are it's just a earnings positioning. You know what I mean? So if you just see a name, one tech name in particular, and it's one good looking order, but we're not seeing it in anything else in that sector, or the flow overall looks like crap, chances are it's just selective earnings positioning. But Al makes a great point. Earnings is going to throw a monkey wrench into a lot of the action here. At best we can hope it creates some momentum to play the run-up type thing, Al. It could be good and bad because it could get shorts to cover because they don't want to take that risk into numbers, right? So there could definitely be some momentum there. I don't know if that answers your question, but it's a tough situation. It's a tough situation. Best case, like you had mentioned, it either comes after earnings or it doesn't catch earnings, right? They go a month out and earnings are after that or something like that. So we'll play it, we'll play it by ear and see what happens. First, we need to see missiles. We can't even let's see some flow, like you guys were saying, come into some weakness. Let's see the flow improve. Right now, like I said, the playbook is when sentiment lines up, looking for that squeeze, raise stops, trickle out of it, take the rip, whatever you want to do. But that's the play right now, and try not to chase. As little as possible if you can, because this is not the market to chase it. All right, guys. Anybody else have anything to add before we wrap it up here? All right, so some names to keep an eye on out of the flow. A couple biotechs you guys like to trade, stuff like that. You could keep an eye on, see if they come back to them. Good sign. Again, tomorrow, the next day, you see a little bit of weakness and they hit biotech again. Maybe they're making a play on the group there. Maybe. That's another thing, Al, we can look for. Maybe they go into groups that really don't have much exposure to earnings, stuff like that. That's a possibility. But these are just things right now to look for, because we're not seeing strong signs of any of that stuff yet. Boeing, we didn't cover it because Boeing didn't catch any flow. Any meaningful flow, anyway. Yeah, BA once in a blue moon will catch a sweep. How about Tesla, huh? Again, just for the squeeze. A couple guys in the room had it nice. But Tesla, some squeeze flow there. Nothing to really remember beyond today. Yeah, but maybe we see something like that in Amazon, possibly. With all the negativity and Trump pounding them to death. We'll see. We'll keep our eyes open. All right, guys, thanks for stopping by. If you guys have any questions, you can hit me up on Twitter. You guys know where to find me. If you have an interest in checking Wise Guy activity out, what we do in the room, etc., we have a 3 free-day trial, no credit card required. So no obligation. You got no CC down, no nothing. You get 3 days. Depending on the 3 days, you can get a feel for what we do somewhat. Okay? You get access to this room here for the 3 days. Okay? The tote board here, my commentary and traders, what they're doing around us. Yeah, George is saying that's not long enough. 3 days is not long enough for anything in this market. But you get a little idea of what we do here. Beyond that, you can get this deal here. Also, we have private Twitter, which we spun off separately as well. That's also kind of a trial type thing. If you want to get a feel for things, that's the flow, all the flow in real time. Just private Twitter, obviously. It's $59.99 a month, and you get all the flow in real time with some sentiment, open interest, and some commentary there as well. If you sign up for the premium package, you get private Twitter included. Private Twitter also, there's me broadcasting Al Michaels style throughout the day, talking about the flow in real time as it comes in. All right. Thanks, guys, for stopping by. Good luck the rest of the week, and we'll see what this flow brings on here. It'll be interesting. Be good, everybody.